This is Javier Perez-Karam from Compass, and we're going to take a quick look at the Brooklyn February market insights that Compass gave me last night at like 10 p.m. at night. I have not had the chance to see this. We're blind reacting. We're looking at this together, and I'm just like going around. This is how I look at reports when I get them in front of me, and I'm doing this thing about doing them in front of you guys because I think it's fun. So let's see, maybe that's too big of a bubble. Let me put me a little bit small. Let's do it on this side. I'm usually on the other side, and I just want to test it out on this side to see how it feels. So Brooklyn Market Insights, February 2024. Let's take a look. This is how we divide the neighborhood. See, Brunswick still here. Some reason it's written here. So I wonder what the data really is. Let's take a look at here, methodology. We don't care about this. Let's take a look at the inventory. Inventory ticked up a little bit from the month before. It's still pretty low in comparison to what we're usually looking at. So I would say below average, well below average. And the existing inventory to the new inventory, there's an uptick. It's just interesting. You know, like always, Brooklyn has a lot of houses, so 53% of the marketplace in Brooklyn, it's houses. And then we have 28% condos, 19% co-ops. That makes sense. South Brooklyn is also huge, and it's the one with most houses. So it also makes sense that 55% of it comes from South Brooklyn. Now you're going to see that North Brooklyn has only 10% here. They do drive the majority of this 27%. Okay, so let's take a look at this again. I just look at this out of curiosity. These are contract signs, and you can see the market share in contract signs. It's less in the higher end and more in the average. Also less in the lower end. So basically, that big middle of the curve is the one that's going there. And this is interesting. When you contrast your contract signs versus inventory. Look at North Brooklyn, it's 15% contract sign, but it only has 11% of the inventory. So that's outperforming the other neighborhoods. We look at houses, 36% of the contract sign, but the inventory is 53%. So it's underperforming dramatically, right? And condos are 40% of the contract sign, even though it's only like 20-some% of the inventory. So condos are probably going to be commanding a higher price, and I haven't looked forward, but that makes a lot of sense to me. Let's see, overall, the whole marketplace, a little bit up month over month, 7.9 up year over year. That's a lot. So Brooklyn still climbing in terms of pricing. We are looking at a median price that held pretty much flat month over month, but went up 10% year over year, 10.7% year over year. Average price per square foot also almost 20% up year over year. Now let's look at time on market. The average days on market is still going up. So this is a problem. I think it has a lot to do with the houses in South Brooklyn. But I don't have that evidence here yet. Let's see what's going to be happening. And in terms of contract sign, we're looking at less contract sign year over year, but we have 7.5 contract sign more. What's it called? Month over month. And the inventory, a little bit up. So you can see with more contract sign and the inventory just climbing a notch, that kind of like shows me that the inventory is going to start to shrink because the contracts coming in start shrinking that inventory. Let's see at the rate that it starts replenishing it. Look at all the average price per square foot are up all over Brooklyn. We're breaking down by segment, condos, all the numbers up. Look at this year over year. Year over year, 13.8 on average, 20.9 on medium. Now, again, all these numbers, I didn't say it here. I'm going to say it because it's important to remember. The sales price, average and medium are all data. It's 3 months, 6 months old in some cases. So what's the most important measure of everything, in my opinion, is really contract sign. It gives me an idea of how many buyers are out there really. And if I contrast contract sign with inventory, then it gives me kind of like a pulse or ratio of what that movement looks like. And the more contract sign versus inventory, the more difficult for the buyers, the easier for the sellers. Right now, we're kind of like in a very balanced market. maybe a little bit more in favor of the buyer, even if we look at these numbers going up. The buyers seem to be having a little bit of a more open, what's it called? An upper hand. I got stuck in there. Okay, let's take a look at condos. Going up, 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 up. Everything's going up. Now, look at days on market. 40% more days on market than the year before. That's not good news. So even though the prices are going up, I wonder if it's more because there's more higher end stuff closing than lower end. And that kind of like just brings these things up. But it doesn't mean that there's no lower end inventory. It just means that the lower end people, because of the interest rates going up, have less power of acquisition, let's purchasing power, and the less of these properties are closing. This is me just interpreting data. I don't have evidence of any of this. But look at contract signs in condos, 18.8% more than the month before. So you can see that pressure there, right? Almost 5% less than the year before. But we also have less inventory than the year before. 8.6% less inventory than the year before. So let's take a look at this. All the prices up price per square foot. Co-ops are losing steam in Brooklyn. Co-ops tend to be a property type that holds a lot of value. We saw in Manhattan, if you saw the market reporting Manhattan, it is co-ops that have the strength. In Brooklyn, not so much. People in Brooklyn don't seem to be into co-ops that much. Queens, you're going to see, it's a whole other story too. I haven't seen it, but I know the market. Queens is a very, very heavy co-op market. But look, the value of co-ops in Brooklyn seems to be going down. The people, less of them are going. The amount of increase in contracts in terms of co-ops is not as much as the other segments, and minus 13% year over year. It's also a lot in terms of contract sign. And you know, this is all data. It's 3-6 months old, like I say a lot, as you know. But it's still data, and it still gives us a feeling of what is happening with co-ops. Days on market not as dramatic as condos, but still up, and it's still negative for the co-op segment in Brooklyn. So if you own a co-op in Brooklyn, you have to look at your pricing and see if how you're going to work that out. If you own a condo, if you're buying a co-op in Brooklyn, then you might have some leverage. Talk to your agent, hopefully me, and see what leverage you can have. And let's take a look at the housing market. So this is also interesting. A little bit up month over month. Consistently up year over year, 6.8 and 10.9, not bad. Price per square foot up, price per square foot down, pretty much a balanced approach. Average days on market are going up too, so the properties are staying on the market for longer. Also, there are a lot of properties that have been on the market for a long time, and February is like that edge of like the old inventory before new inventory comes in. So that is affecting certainly this in terms of what it looks like as of last year, because the year before we were not coming from a similar situation. It was not an awesome market, but we were not coming from like a stagnant inventory yet. And in terms of contract sign, we know that houses are the majority of the inventory. We know that houses are the majority of the inventory in Brooklyn, and that they're only a third of the contracts. So it's no surprise that the contract sign are not performing at any growth, and they're slightly shrinking, right? Even though there's still more inventory year over year. Steep discounts, almost 10% discount in the properties that sold. And I think that's it. That is it for Brooklyn. What do you think? If you're a seller, what are you thinking? If you're a seller, you have to, depend on which segment you are. If you're a seller of a condo, you're probably doing very well. If you're a seller of a co-op, take a look at your price. If you're a seller of a house, you have to do something special. you have to either price special or look very special. There must be some kind of incentive that you can offer to a buyer, hopefully. And yeah, if you are a buyer in Brooklyn and you are looking for a condo, ouch. Not really ouch. It's not terrible. It's not as bad as it has been. But it's also not the easiest market out there. And if you are looking for a co-op or a house, you have a little bit of leverage. Let me tell you why. Let me tell you how. Well, I was all small there talking for a whole bunch, so now a little bigger here. Anyway, thank you for watching. Share it with anybody that you think might share. The next one coming up is Queens. I'm also going to blind react to that. I would love to know what your opinion is about this video, so let me know. Drop me some comments or DM or whatever it is that we do here. Talk later. Thanks.